Hi, my name is Steve Banker. I'm Service Director for Supply Chain Management at ARC Advisory Group. I'm here today to talk about our Transportation Management Systems Study. It's a global market research study. ARC has been conducting research in the area of supply chain systems for a long time, for 15 years ago or so. And we've been doing this transportation management study for over a decade. I guess the place we should start is just to define transportation management systems. And um, transportation management is interesting because if you're to compare it to a warehouse management system study that we do, the definition of WMS has barely changed in 15 years. But if you look at TMS systems, the scope of their coverage and what they do has expanded dramatically. And our definition has had to expand as well to fit the changes that have happened in the market. So here's our definition. A transportation management system helps companies efficiently, reliably, and cost-effectively move freight from origin to destination. TMS encompasses all modes. It encompasses freight transported inbound or outbound, freight moving domestically or internationally, transportation assets owned by the company or owned by a carrier, and freight that ranges in size from parcels to bulk commodities. There's two main types of transportation management systems. So a lot of shippers do not have any transportation assets, don't have trucks or rail cars or whatever, and they need to work with carriers to pick up their loads and to deliver them where they want them. We call this segment of the market planning and execution. And so if you look at this high level architecture drawing, at the top level, we sort of encompass the process. And the process starts with sourcing, and you have a route guide, and you figure out the optimal way to do your shipment, you tender it, and there's some collaboration around whether the carrier accepts it or not. And finally, you want to audit what has happened and make sure that you're paying a fair amount to the carrier and you're paying what is really owed and not more. And other pieces of this solution is there's a control tower that gives you visibility and exception management capabilities. You can see what's happening with your shipments. And there's a critical business intelligence layer that helps you understand whether you're progressing towards your goals and allows for continuous improvement. The other solution is for companies that do own transportation assets and they want to make sure that they're utilizing those assets to the fullest extent possible. So the heart of this particular solution, the fleet management solution is what we call this, has always been routing. But just as I mentioned with planning planning and execution and how that definition has gotten bigger and the scope of that solution has gotten bigger, I think we're at a similar place on the fleet management side. I think now with GPS, we're going to move fleet management from being more focused on operational efficiencies to also being able to leverage GPS not only for routing, but for dynamic routing, and then for transportation asset management and for transportation compliance purposes as well. But we're just at the beginning of those developments. Now we are trying to sell you this study. That's why I'm giving this pitch, and I'm not going to actually tell you what the numbers are around our forecast for TMS, but I will tell you this. It is one of the hottest enterprise software markets. Why is it one of the hotter software markets? Well, probably the main reason is a return on investment. Now, I'll talk more about that in a second. But there's some other drivers in this market. There are some very big ERP companies that have brand new TMS solutions that are pretty robust, and they've entered the market. And whenever a big boy enters the market, it moves the market. I mentioned before that the footprint for the planning and execution solution keeps getting bigger. And as it gets bigger, it applies to more and more different industries, and it applies better to companies, even companies outside of North America. And then software as a service has allowed us to sell transportation management solutions to smaller companies that have bought them historically. But these solutions also have some very interesting capabilities. In fact, they have some capabilities that the older traditional software license model solutions just don't have. There are inhibitors. You know, it's a tough worldwide economy out there. When people are trying to improve their transportation capabilities, they can buy a TMS or they can elect to go with a 3PL to do their planning and execution for them. And the SaaS part of the market is growing, but when people buy a SaaS solution, they're buying something that costs less money up front and tends to keep the size of the initial market smaller than if they had bought a software license, but does give the market better legs. So I mentioned return on investment, and we have done some research here. This is based on a strategic report we've done. If you buy the TMS study, we'll give you the strategic report for free. And basically what it shows is a variety of buckets in which a TMS can save you money. So um, it helps reduce maverick spend. It improves your procurement. It helps you go with the lowest cost mode selection. So for example, train is cheaper than truckload. It helps you more fully load what you're shipping. So, you know, if you're loading up a truck, you don't want 30% of that load to be air. You want to load it as full as you can. It improves routing, and it helps make sure that you're not overcharged by carriers. Now let's just look at that top row, increased usage of preferred carriers. In this particular bucket, what this table is showing is about a third of folks that buy TMS get no savings at all in this particular area. But most commonly, when people buy TMS in this particular area, they get savings of 2 to 4% on their freight spend. And so there's different types of savings buckets. But if you add it all up, what our research showed is that the majority of companies get savings of between 5 to 10% off their freight spend. Now, if you're spending $100 million shipping goods, you know, that's taking your freight budget down to 95 or 90 million. That is substantial return on investment. So who would want to buy this study? Historically, suppliers of, in this case, transportation management systems have been our primary buyers. They want to understand how big the market is. They want to understand how fast it's growing, and they want to understand their market share against their competitors, not only, you know, overall, but in a variety of different verticals and regions. In recent years, what we've had is more end users buying our studies. So people that are looking to buy a transportation management system find the market data helpful in figuring out, you know, which of the TMS vendors are playing in their particular industry or in their particular region. And then the other folks that sometimes buy this are people in the financial industry that are paying attention to various companies and just want to see how a particular company is doing that they're covering. Or maybe they're venture capital guys and they're looking for fast-growing markets like the TMS market as a place where they might want to make investments. If you were to buy this solution, you can get it in a variety of different manners. You can get it hard copy. You can get Mira, which is our online market intelligence, it's basically a web Excel type tool that allows you to slice and dice the data in a variety of ways, or you can get it in the form of a PDF. In summary, this is Steve Banker of ARC Advisory Group, and I've been here to talk to you about our transportation management system study. Thank you very much.